Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. A quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry. I'm here to help you comb the markets the right way. Shovigram, welcome. Thank you for being the first one to join the Instagram live. If you have any inquiries, kindly put it in the comment section. If you have any asset that you want me to look into, kindly put it in the chat section. I'll be glad to be of help. Starting off with the promotions that we do have currently ongoing is the Battle of the Elite, round number 2, whereby you have an opportunity to become Kenya's Don Wabis, and this is bigger, this is better, whereby 650,000 Kenyan shillings is up for grabs. Now the competition is going to run till the 31st of this month, whereby we still have a bit of time remaining for you to join, whereby once again, number 1 is going to walk home with 650,000 Kenyan shillings. Number 2 is going to walk home with 260,000 Kenyan shillings. Number 3 is going to walk home with 130,000 Kenyan shillings. We are going to have 10 winners in the lucky draw, walking home with 26,000 Kenyan shillings each. How do you join? You go over to your HF under the promotion segment, join Battle of the Elite round number 2. Deposit at least $100, trade any asset and rank in the top 3 traders by percentage wise. Looking at the leaderboard, Bakintu is up 322%. Interesting. Manya FX is up 77.85. Then we do have Sami at number 3 with 47.65, meaning if you deposit today $100 and you make only $1, you are going to be on the leaderboard, stand a chance to win the prize pool. Now, moving over to the morning market call, whereby, as you all know, we usually start our day generating ideas. You have woken up, I have woken up. What are we going to look at? Which are some of the assets that I would want to be interested in to help me look for opportunities? Now, the best place to start is the HFM economic calendar, whichever browser of your choice. Also, this is available on the application, whereby if you go to the tools and education segment, the economic calendar, if you do click on it, this tab is going to pop up. Now, this is one of the best tools that you're ever going to have as a trader. Why? Because it's going to help you plan out your trades even before they do happen. Let's say, for example, today we did have Bank of this was Korea, whereby they just released their interest rate decision. The previous number was 2.5%. We were looking at a consensus of 2.5. The data actually came in at 2.5%. Now, when you click read the official report, it's going to take you to the official report that was released. Now, this is Bank of Korea base rate, whereby they did decide to hold their interest rates at 2.5%. Meaning, if I'm looking at trading the Norwegian krone, I would want to focus on looking at this piece of information. Now, once again, whenever you look at it, you ask yourself, will this information enable me to find long opportunities or short opportunities in the marketplace? Now, most of the times we don't trade this because these ones are exotics, but you would want to focus on red folders. Let's say, for example, today we don't have any red folder, but tomorrow being a Friday, we do have red folders, starting off with the Reserve Bank of Australia, Governor Bullock, who's going to release the speech. And for us traders, we want to focus on what is going to be the tone of the central bank, the Reserve Bank of Australia. Are they going to increase rates? Are they going to lower interest rates? Now, this is going to affect what is going to happen to the Australian dollar. Now, she did commence her current position in September of 2023. And why would we want to look at this? Because central banks are the biggest forex participants. Whatever they are going to mention is going to have an impact on forex trading, meaning currencies are going to move as a result of the reflection of where the central bank feels like the future economic outlook is going to be. At the end of the day, tomorrow we do anticipate interest rates coming out, but consumer price index, which is inflation, which usually affects the Fed Reserve in terms of interest rates, whereby we do anticipate the previous number was 2.9%. We are looking at a consensus of 3.1%, whereby we do anticipate the data inflation to peak in the United States of America over the past year, commencing September. Now, this is going to be very important. Why? Because when you look at consumers, this data usually looks at how they are purchasing at a consumer level. When you look at the United States of America, it is a country that is built heavily on debt. They do purchase a lot of goods and services. Now, if they do purchase a lot, it means more dollars will be in circulation, and as a result, we are going to see more money in circulation, hence the strength of that economy. Now, it is currently earnings season, and once again, if you go over to the tools and education segment under the earnings calendar, you can see we do have quite an interesting amount of activity happening, whereby we do anticipate the earnings for Nokia to come out before market open today. The earnings per share estimate is at $0.29 per share. Now, last year, the same quarter, the EPS was $0.25. Now, we are going to receive quite the amount of earnings this coming week, whereby next week we're going to have from Visa, McDonald's, PayPal, we are going to have AMD, Starbucks, Alphabet, Ford Motor, and this is going to affect the S&P 500. If you're deep into equities, let's say, for example, the S&P 500, the NASDAQ, and the Dow Jones Industrial Average, you will want to look at earnings of this company. And I want us to look at a few companies that have just released their earnings, starting off with Hilton, which they did release their earnings yesterday, whereby they did beat estimates, raises full year profit outlook despite US demand dip. Now, their third quarter adjusted earning per share of $2.11, surpassing consensus estimate and last year's results. The revenue did rise 8.8% year over year to $3.12 billion, despite a modest 1.1% drop in revenue per available room and some softness in US demand. Now, the company raised its full year adjusted EPS guidance to 7.97, which is above analysts' expectation. Not only that, we did have earnings also from companies like, I want to talk about the major companies, starting off with Netflix. Yesterday also did release their earnings, but it was just shy of estimates from analysts, whereby their revenue was 11.5 billion, which is up 17% year on year, but just below expectations. The EPS came in at 5.87, missing the consensus estimate due to a $619 million tax expense related to a Brazilian dispute that is currently ongoing, which reduced the operating margins to 28% from an expected 31.5%. Now, despite this, Netflix did record its biggest and best quarter ever for advertising sales and is on track to more than double its ad revenue in 2025 and achieved record US and UK TV share buoyed by hit content and robust engagement. Now, when you look at this information, what does this mean? When you look at Netflix is part of the NASDAQ, and this means that if these companies are going to do relatively well, if I'm looking at equities, I would also want to look at more net long opportunities. Not only that, we do have Lockheed, which is big in US and allied defense markets, whereby they are currently waiting on contracts for a lot of F-35 airplanes. Almost 18 and 19 cash from operations did rise to 3.7 billion. Now, their earnings were at 1.6 billion, which is about $6.95 a share, reflecting steady demand across the defense markets in the United States of America. Coca-Cola were not left behind, whereby they did beat expectations and their net revenue is up 5% on the third quarter, as they did come out at 12.5 billion, which is up 5% year on year with organic revenues despite currency headwinds, while operating income did surge by 59% and earnings grew by 30%. Now, the earnings did come effective cost management and price mix as growth when the key drivers noted gained value in share in the non-alcoholic ready-to-drink beverage category globally. Now, the CEO, James Quincy, emphasized flexibility and investment for growth, expressing confidence in meeting 2025 targets, even as the operating environment remains challenging. Now, I would want to look at 3M and one more, whereby 3M is a company that produces face masks. They do produce a lot of industrial materials. Let's say, for example, reflectors. There are times whereby you can pass a vehicle and then they do have those yellow warning strip lights. Most of most of the strips do come from the company 3M, and they did announce their third quarter earnings results before market open, beating both profit and revenue expectations, with reported earnings per share of $2.19 and a revenue of almost $6.3 billion, despite the consensus of 6.25 billion. Quite interesting noting. Now, the vehicle industry, once again, they did prove to come out with better earnings despite the EV shutdown. Now, we were looking at a low uptake of electric vehicles, and this did affect companies. When you look at Tesla, when you look at these companies, let's say, for example, General Motors, they did release their earnings, and despite ongoing challenges in the electrical vehicle segment, the automaker cited successful cost-cutting measures and a resilient core business, though it warned of slower growth in EV sales due to supply chain issues and shifting consumer sentiment. Now, this is part due to the tariffs that we are seeing between the United States and China, whereby China has a lot of rare earth materials, including the magnets that are used to produce electrical motors. Now, if there are going to be supply chain issues, it's going to affect these companies, because if we do anticipate them to produce these vehicles, but there's difficulty in how they're getting the raw materials in terms of producing these vehicles, yes, it's going to affect the earnings of these companies. But we have been seeing them put on a higher level in spite of everything that is happening currently at the moment. Now, I want to switch gears to what is happening currently at the moment. And the entire of last week, we did see IMF meetings, and it was quite worrying looking at what they said in terms of where stock valuations are. And last month also, when Fed Chair Jerome Powell released his speech, he did mention also that stocks currently are overvalued. Now, we are heading into winter, we are heading into festivity seasons, whereby most of the times we usually see profit taking on these companies. Now, how is this going to affect price action? Let's look at the data. Starting off with the title of this article, Sky High Stock Valuations Are Increasing the Risk of Disorderly Corrections That Could Rattle the Economy. Now, looking at it, the IMF warns that elevated stock valuations risk causing financial market turbulence. US stocks, especially the S&P 500, are highly valued, posing correctional risks. Now, the high concentration is in AI stocks, and household exposure could impact the economy. Now, the valuation models indicate that risk asset prices are well above fundamentals, increasing the probability of disorderly corrections when adverse shocks do occur. Now, what does this mean? Remember, in Forex or in any business in general, whenever someone buys an asset and it appreciates its value, yes, you do anticipate if they sell, there is going to be a correction. Technical analysis is king. Yes, Timothy Ogaro. Technical analysis, yes, it is king, because everything is going to be fixed onto one price point, which is data at the particular price that you're seeing currently at the moment. And we're going to look at that in just a few moments' time. Now, if you have any inquiry, if you have any asset that you want me to look into, kindly put it in the chat section. I'll be glad to look at it. Now, switching gears, moving over to Japan. Japan's new Prime Minister, Takaichi, is preparing a large economic stimulus to tackle inflation. Now, this is not yet confirmed, but the Japan's new Prime Minister, she was sworn in last week, is likely to exceed last year's $92 billion to help households tackle inflation, government sources familiar with the plan said on Wednesday. Now, the package of more than 13.9 trillion yen, which is more than $92 billion, is Takaichi's first major economic initiative since the advocate of the big fiscal spending as she took office last week on Tuesday, reflecting a commitment to what she calls responsible, proactive fiscal policy. Now, we do have yeah, Timothy, this is very interesting. Very interesting. When you look at the numbers, $92.1 billion, it's quite a lot of money. Yeah? And this is going to be reflected into price. So price action is going to tell us everything that you need to know. Do you offer classes on fundamental analysis of the awful? Yes, we do. Each and every day, this is what I do. Whereby I have a 5-step trading process. I wake up in the morning, I generate ideas, I share with you this information, and during the classes, we look at how we are going to plan it out. Now, 21 Forrester wants us to look at BTC USD. Okay, we shall look at that, but I don't have it in my chat section currently at the moment because we are yet to receive confirmation of bringing back crypto. Now, Little Kin wants us to look at gold. We shall look at gold. Timothy Ogaro, since you're looking on Japan, let's try USD JPY. Okay, we shall switch over to the charts in just a few moments time, actually just after this article. Now we are looking at this money, the stimulus plan that Takaichi wants. She wants to bring this money into the economy. She wants to put it into people's pockets. This means that there's going to be more Japanese yen in circulation in the near future. How is this going to affect price action? Now, final thing I would want to look at is the government shutdown. It does continue. Today is day 10 hours currently and running. Ever since the government has been shut down, we are just shy of the 35-day. This is the second longest funding lapse that we have seen in the United States of America. And yesterday we did see the Democrats having quite a marathon speech of more than 22 hours trying to broker a deal of what is going to happen in the United States of America. Now, that aside, let's move over to where the money is usually made, and this is usually on the MetaTrader. Let me share my screen here. Beautiful. Are those classes, physical classes, free? Yeah, they are free. Okay, so let's start with USD JPY. Okay, the dollar against the Japanese yen. Okay, before we go over to USD JPY, let's start with the Nikkei 225, which is the benchmark of how the Japanese yen economy is actually doing. Now, this is an index looking at the top 225 companies in Japan. If this index usually does better, it means the economy is headed in the right direction. Now, looking at it from a higher perspective, we have been seeing quite an interesting amount of price action, whereby prices are making currently lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And this is partly due to the fact that we do anticipate Bank of Japan to increase interest rates in the near future, and this could affect profits of these companies. That plus coupled with the tariffs that we have been seeing being enacted by the Trump administration, whereby looking at the most recent price action was around this region here, whereby we did see when Trump did mention about the tariffs, once again, the 100% tariffs on China, we did see the markets react negatively. And currently at the moment, we are in a period of consolidation. Now, this is usually a benchmark of, no, this is in New Zealand. Where's the Nikkei 225 here? Okay, beautiful. Now, this is the Nikkei 225. Once again, this price action that we are seeing here was when the Trump administration did enact tariffs on China. Now, when you look at these companies, they are positively correlated, meaning if the Japanese economy is going to be affected, and looking at what Bank of Japan has been saying recently in terms of how the markets are currently operating. When you look at Japan, you ask yourself, yesterday we released the data in terms of the trade balance, which was released yesterday. We did see the data coming in actually negative, whereby there was a deficit of almost $238 billion in difference between net imports and net exports. Now, Japan are net heavy on exporting, meaning they thrive on a weaker currency and they do depend on selling to other countries more for them to sustain themselves. But if the data does come out like yesterday, whereby they did import more than they did export, we do anticipate a weakness in the short term on the Nikkei and also on the Japanese yen. Now, looking at it, we are currently giving back, but on a larger perspective, the Nikkei 225 is just did make all-time highs less than 3 days ago, whereby it did tap into 49,973 region. Now, looking at US dollar against the Japanese yen, which is the assets that we mostly trade, looking at it, we did have this gap here. So let's break it down from a higher perspective, moving down to a lower perspective. Now, this gap that we did have, this was Friday's closing price, and then this was Monday's opening price. This was the region whereby Takaichi was elected in parliament, not sworn in, but was elected over the weekend. Now, when the markets did open, yes, she is a fan favorite of looking at stimulus programs like what we have just seen her starting to implement, whereby $92 billion is going to go to the Japanese economy. We did see the markets gap almost 0.85%. The markets moved to the upper side. We had a correction. Prices came back into that gap, but currently at the moment we are seeing prices push further to the upper side. Now, we have been looking at a strength in the dollar. Why? Because of the 10-year yields that are currently being attractive to investors. Now, how do you piece in this information? I want us to look at the 10-year treasuries and then look at the Japanese yen and the dollar together and see why price action is doing what it is currently at the moment. Now, looking at the 10-year treasuries, it is from ever since the year did begin, which was around this region here. If I can pick a measuring tool. So this was the opening price of this yearly candle. Looking at it, treasuries are now currently offering 4.74% return on the year only, meaning it's much more attractive for investors to put their money, park their money into 10-year treasuries on the United States as a result of the yields. Now, looking at the dollar against the Japanese yen, they have been having a few uncertainties in terms of where the markets could go towards next. Why? Because once again, Japanese economy is heavily dependent on global markets. If the global markets are not okay, if the global markets are not sustainable, then the Japanese yen is going to have an impact. If Americans are not going to buy Toyotas, the Japanese yen is going to be affected. Now, does HFM have any event for traders in the near future? Yes, we do. I shall talk about that in just a few moments' time. We just concluded the Thika pip stop. We are currently having a few more in store for you. Now, looking at the Japanese yen, where do I anticipate prices to move into the near future? If this stimulus program is going to be rolled out sooner rather than later, I do anticipate price action to move further to the upper side in relation to the Japanese yen, meaning I do anticipate the Japanese yen to gain strength in the near future. If at all, we do anticipate what is currently being planned out in the future. But if it continues to persist whereby the yields are going to be much more attractive and the Japanese yen are going to have uncertainties in relation to the interest rates, looking at price action currently at the moment, the 1 hour time frame is well above the 50-period moving average. I do anticipate prices to continue moving further to the upper side on US dollar against the Japanese yen, potentially coming back to these highs that we did have quite a while back, around 153.262. How price action relates to this region is going to decide where markets could go towards next. Now, looking at it, the direction is to the upper side currently in the short term, whereby I would want to focus on more net long opportunities if at all prices do break this region above 152.646. Whereas on the other hand, if we do break below the opening price of today's daily candle at around 151.822, I would consider looking at more short opportunities, potentially coming back down to the 150.4 region. Now, switching gears to gold. Gold is very interesting, whereby we did see one of the most volatile days ever since 1979, whereby in less than 40 hours of trading, gold lost almost 8.56% of its total value. This was equivalent to more than 3,760 pips being lost in the markets. And this brings me back to the article that we were just looking at. Stocks are overvalued. metals are overvalued. Could we start seeing institutions take profits on these assets? Is what we are seeing currently at the moment the results of institutions booking their profits? If you look at gold on a daily perspective, we have been rallying quite significantly for quite some time, and then we had this massive sell-off. Now, could the trend start changing, or could this be a short-term retracement for prices to continue further moving to the upper side? Now, looking at it from this perspective, this weekly candle is going to be very important to us, how it's going to close. Remember, today is Thursday. We do have only one day for the weekly candle to close, and the monthly candle has only 1 week remaining, meaning this month of October is going to be very decisive in understanding how prices are going to move into the festivity period. Now, let's say, for example, November and December. Is this because USD became stronger? Yes, this is because the United States dollar did become stronger as a result of the 10-year treasury bills that we have been seeing. The yields have actually been positive, whereby 4.75% is quite attractive for investors. Now, once again, looking at so Timothy Ogaro this is a short-term retracement for me. Gold will definitely be bullish later on. Quite interesting. Looking at it from this perspective, yes, we are seeing the market starting to correct its move that it had just made over the past 2 days. We are currently trading above the opening price of the daily candle, meaning if today's daily candle closes well above the 4,100 region, there could be a potential of prices moving further to the upper side. We are currently approaching the 50-period moving average. If we start getting candlesticks closing above this region, then yes, I do concur. We might see long opportunities on the precious metal. Silver was not left behind, whereby once again it did have a massive correction to the downside. This was the analysis that we did have on Tuesday, whereby we did speculate prices breaking below the $50.8 an ounce region, and we did see massive corrections. But currently at the moment we are seeing bulls coming into the market. Looking at silver, already is now trading above the 50-period moving average, meaning the trend could start moving to the upper side, and this was just a short-term retracement. This was the result of institutions taking profits on their long positions, and they did get a much better entry around the $48 an ounce region. Now, I would want to look at equities, starting off with the US 500, whereby once again we did see this price action, and I want to take you back to this period here also. If you look at this price action, this was 16th to 17th of October, whereby we had bearish candles that had longer shadows to the bottom side, aggressively to the downside, and then prices corrected itself. Now, we were seeing the same thing happen. Look at this, whereby a similar price action, we have bearish candles with longer shadows to the bottom side. Could we see these now being corrected fully to the upper side, potentially prices coming back to 6,768 region on the S&P 500? Okay, so that's interesting to note what is going to happen. So Timothy, in your experience, does fundamentals really work on NFP predictions? Now, NFP is technically fundamentals, whereby you're looking at how people were employed. And if you come over to the classes, I talk about it in depth, whereby it is a chart of price against time, and there are algorithms that deliver these prices to us. And investors, if they want to purchase or sell, there is what we call clearing houses. Now, clearing houses, let's say, for example, the DTTC or the CLS, are the people tasked with the mandate of putting these orders into the marketplace. Let's say, for example, institutions want to buy trillions and trillions into the marketplace. They need to look for efficient methods into how they deliver the prices into the charts. Now, when we look at news releases, usually it engineers and generates that liquidity. So yes, fundamentals do work on NFP. Why? Because it's going to engineer that liquidity for prices to move to the region that it wants to go to. Now, when you look at, let's say, for example, speeches of Fed Chair Jerome Powell, for example, whereby there are times whereby he's going to start speaking and the markets start moving aggressively. Now, this has an you ask yourself this question: why does price move? It is because of these algorithms digesting his speech. Is it positive? Is it negative? Then the markets react accordingly. So what's your take on gold? As we have just looked at it, but once again, we are looking at potential. If prices do close well above the opening price of the daily candle, I would want to consider looking at more net long opportunities. Whereas on the other hand, if we do close below this region, the region of support around 14, I would want to consider more short opportunities on the marketplace. Now, going back to the equities, once again, the S&P 500, the NASDAQ, and the US 30 are positively correlated, meaning if this one starts to move to the upper side, there's a high likelihood the others will follow suit. Now, we were talking about this piece of price action whereby we are having candlesticks with larger shadows to the downside, but could we see prices correcting to the upper side, potentially breaking all-time highs? Now, we are quite worried at the moment because looking at it on a higher perspective, these stocks are at all-time highs. Looking at the 7 major companies, the magnificent 7 that make up the Dow Jones Industrial Average, look at it. Prices are very bullish to the upper side. Now, the question is, could we see more of it to the upper side? We are seeing earnings coming in positive for most of the companies, for the big companies, especially in the S&P 500. And this could add more fuel to the fire, whereby we might anticipate more long opportunities on the equities, but the yields are bringing something different, whereby could we see now institutions offload their positions from risk of assets and then take on the risk on equities, on the treasuries. Now, looking at oil, starting off with US oil, we have been seeing prices break above the $60.88 a barrel today. Quite interesting to note. Now, we are about to head into winter, and this could affect oil prices because the demand usually peaks to the upper side as a result of more homes requiring energy to heat them up. Now, prices are currently trading above the 50-period moving average. I would want to consider more net long opportunity. We were looking at the $60.22 a region, barrel, $60 a barrel region, and I do believe this was yesterday's analysis, whereby currently we are well above that region, meaning considering looking at more net long opportunities could be a viable idea if at all this price action continues to move the way it does. Now, looking at the next potential target, I would want to consider 62.93. If I can round it off to $63 a barrel, which is a psychological level, could be the next potential targets for prices coming back to, but this is all going to be dependent on what is going to happen. Now, we were seeing European Union cutting back on the purchase of oil from Russia, and I would want to look at how this is going to affect oil prices, because when you look at Russia, before the war, they used to supply more than 45% of energy to Europe. After the war, currently they are supplying less than 12%, and the European Union is looking at cutting back on oil purchases from Russia into Europe, meaning from January of 2026, we might see oil prices stick to the upper side as a result of supply and demand constraints. Now, regarding USD being more lucrative to investors because of the 10-year bond, how can Japan potentially counter this to make the Japanese yen stronger than the US dollar? Okay, this brings me back to what we are seeing, this article here. Now, one of the mandates of an economy, let's say, for example, the central banks. Now, the central banks are the biggest forex participants. Now, these central banks are run by politicians. Technically, they're independent, but it's the politicians who appoint the governors to the central banks. Now, their mandates is to find balance. If they feel like the economy is slowing down drastically, what they would want to do is provide stimulus into the economy. Let's say, for example, this is going to be the biggest package, the biggest stimulus package that is likely to exceed $92 billion. dollars. This is quite an interesting amount of money, whereby the government is now seeing the economy slow down. And what they would want to do is to put more money into people's pocket so that they spend. Because generally, if people are not spending, it means the economy is not strong. So if they feel like it's going to slow down, these are some of the things that we do anticipate the government to do. Now, to counter this, the Bank of Japan could release this stimulus. Now, currently at the moment, it's not yet confirmed, but this is quite a lot of money being put into the economy, meaning more Japanese yens are going to be in circulation, meaning it is going to strengthen in the near future. Now, this coupled with Bank of Japan, we do anticipate Bank of Japan to increase interest rates in the near future, meaning the Japanese yen is more likely to strengthen. But this is going to be dependent on what is going to happen over the next few weeks. Okay, so that's a very beautiful question from Timothy, but it's all going to be dependent on the data. Now, when you're looking at fundamental news releases, one thing I usually see being difficult is how do you apply this information to technical analysis? Yes, we know that money is going to come into the markets, but how can you plan yourself better, anticipating these moves even way before they do what? Before they do happen. Now, looking at the dollar against the Japanese yen, currently the trend is to the upper side, but if this stimulus program is going to be executed, then we might anticipate prices to start moving further to the downside. Now, we are looking at fundamentals, then you go look at technicals. How can you find opportunities now to increase liquidity and money circulation, basically, right? Yes. More money in circulation, more liquidity, more Japanese yen, the stronger it's going to be. Now, we do have currently a few pip stops that are ongoing. Sorry, Shiko. I'm seeing a message right now. We just concluded Thika. On the 23rd and 24th, we are going to be in Kiambu at the Phoenicia Hotel. This coming 23rd, actually today and tomorrow, we are going to be in Kiambu. On the 25th and 26th, we are going to be in Isli at the Nomad Paradise Hotel. Then we are going to conclude the Nairobi Pip Stop Tour with Kitengela on the 27th and 28th at the Galaxy Resort, which is in Kitengela. If you are in any of those places, kindly join our team. We are going to share a lot of valuable information. We are going to give out funded accounts, credited accounts. We are going to offer you the best knowledge that is going to enable you look for opportunities the right way in the markets. That's going to be it for me. I will see you tomorrow at a similar time. Take care of yourselves. Stay safe.